Hey everyone, welcome to Real Estate, Real Wealth with Alex Wilson, broker owner of Remax Wealth Builders Real Estate. And today I'm really excited. Good friend, business partner, alumni of the same institution. I'm bringing Tyler Pearson, president, co-founder of Mallium Real Estate Partners, here to speak with us today. And it's exciting because he's done the opposite of what I have in real estate. So what that is you can make a lot of money in real estate, and there's many different ways to do that. And we're going to have a great chat about the ways that he made his money in real estate and how he's making other people wealthy through his investment techniques. So let's bring him on. Hey, Tyler, how's it going? Thanks for taking some time. We go way back, and when I reached out, I was so excited that you could chat with us today. Yeah, how's it going?
Things are good, man.
Yeah.
They're busy as we just caught up a little bit earlier prior to the show kicking off. They're crazy busy, both on the business side of things and on the home front with three kids under four and everything else that brings with it. It's an enjoyable time, a crazy hectic time, but it's a life we've chosen and we've only got one shot at it, so enjoy it.
Yeah. Well, yeah, exactly. And and I'll bring it up the other videos, podcasts we've done. We're investing in two things. We have finite time, and real estate's finite. When you apply those two things, you can build incredible wealth. And so it's great that you put that in regards to like managing time and everything, because that's what we're investing. We're managing time, and I know, when we get into it, what you and I did in our 20s and what we do now entering our 40s is completely different. I
Wildly
could,
different.
there's no way I could do in my 20s. Oh, sorry, there's no way I could do today what I did in my 20s. So what I'll do is, so to give some background on Tyler. So everyone knows I've invested in condos. I like condos. I buy pre-construction condos. I like other people building properties for me, so I'm not involved in that. I think it's a very passive way of making money in real estate. Tyler, right out of university. So for those that don't know, we both went to Wilfrid Laurier University. Backgrounds in business and economics. And out of university, Tyler went into he went to the corporate world. But on the side, he was fascinated with real estate and really followed the mantra of RAIN, which is the Real Estate Investment Network. And what he started doing is he started buying multi-res properties and transforming those properties, and talking and learning those techniques. So, Tyler, why don't you talk about in your early days of investing, when you started your journey, how you started building your portfolio, buying multi-res properties?
Sure. Yeah, it's been a crazy, to some extent, winding road to kind of where I've gotten to today. And I think candidly, I would like to think it's still early innings in that road. I still think there's a tremendous amount of growth and a tremendous amount of opportunity for both you and I, and quite frankly, anybody else that wants to kind of pursue this avenue for creating wealth and ideally, in my eyes, and I think you would agree, generational wealth. Because I truly, believe there's not another asset class that provides the same opportunity as real estate. I know people can debate that, people can disagree with that, but I've been doing it for 20 years, and I'm very happy with obviously the returns that it has generated for not just myself, but obviously those who have chosen to come along for the ride, and those who have kind of entrusted my business partner and I with their capital. It's a huge responsibility that we don't take lightly. So to get back to kind of the core of the question, my story, honestly, it's not a lot different than a lot of other people who are doing this. I realized after coming out of university that the corporate world was going to serve a purpose. It was not a purpose that was going to last indefinitely. I realized early on that I had to, or I wanted to, find another revenue stream to complement my corporate income. And when that revenue stream got close, I said to myself, that's when I would take the water wings off and jump. So right from honestly day one, out of school, I started to look for investment properties. At the time, obviously, I didn't have a lot of money. I have no problem saying that. Um, you know, I chose to go after very, I'll say, simple base hits, which were at that time kind of 3 bedroom, 2 bath condos in Toronto, Sarnia, Hamilton, Oshawa, etc. With no real strategy other than kind of a shotgun strategy, and I was at the time just chasing cash flow because I had a number in my mind of what I wanted to get to, and I knew when I hit that number again, I would be able to take the water wings off comfortably and leave the corporate world. And um, fortunate to say that that occurred about 7 years ago, 7 or 8 years ago now. Um, and after amassing a pretty good sized portfolio of smaller investment properties, again, it's a very common story where people start to realize maybe there's another chapter, and by that I mean that chapter usually looks like multifamily. So at that time, I decided to liquidate a handful of my single family assets and take more of a targeted approach to multifamily. Again, not uncommon. Started small, wanted to get my feet wet. Procured a number of duplexes, tris, quads, all within kind of the similar geography. Again, a pretty shotgun approach, and I would change that looking back for sure. I would take much more of a targeted approach moving forward, or if I were recommending advice to anyone. And then where things, really took a turn positively was when I really got out of my comfort zone and I chased down a 20 unit building out in Oshawa. Again, this is probably going back now 12 years ago or so. But a 12 unit building for, I think the price tag, I think at that time, or no, sorry, 20 unit building for $899,000, which at the time seemed like a lot of money, which to be candid, I think it still is a lot of money today. But certainly that is where the rubber hit the road. And, without going into all the details, the rubber really hit the road then, because that's when I truly saw this as not, necessarily buying a building. At the end of the day, you're buying a business, and you're not really buying bricks and mortar. You're buying a stream of income that exists today. And if you can obviously take that income and improve it, either by lowering expenses or increasing revenue, you have the ability to generate a tremendous amount of value across the board, and obviously sets you up for a strategy which is being used by, I think, everybody today. I didn't hear about the acronym back in the day, but the BRRRR strategy, which that's kind of what kicked off everything. So that project in Oshawa went very well. I was able to pull out a tremendous amount of equity and basically repeated that strategy for at least another, I want to say, 5 or 6 buildings over the course of 3 or 4 years.
Now, now,
Got to
now,
about
now,
100.
now I'm going
Yeah,
to cut you off a little bit here
yeah, go for it.
before people get too excited. Um,
Go for it.
tell they it's not easy transforming a building,
No,
and
no, it's not.
why don't you talk about I have somewhere I'm going with this at the end at the
Yeah,
end
go
of our
for it. Yeah.
chat, but why don't you tell them about when you first walked in the Osha building in the one unit? I think it didn't have a toilet.
Yeah. So again, don't judge me too harshly, but you learn as you go. And at that point, I was very attracted to the sticker price for 20 units. I was very naive to think, and please don't take this the wrong way, Alex and or any other real estate agents that are out there. I was very naive to think that, um, you know, the agent was not necessarily um, concerned. No, naive to think that the agent would be concerned solely for my interests. I think the reality is he saw an opportunity to strike a deal. He potentially saw someone who was a little bit green. And long story short, I procured that building. There's a story here. I'm getting into it without actually touring all 20 units. Because I just said, you know what? The reality is, I'm buying this building for so low on a per unit basis. I don't really care what the units look like. In hindsight, again, I would recommend that to everybody moving forward. If you want to look at a multifamily asset, whether it's 2 units or 200 units, make sure you get into every single unit, because as I toured the building after acquiring it, there was units that literally had no plumbing. There were units that had toilets in living rooms when obviously they should be in bathrooms. There were units that were completely in a state of disrepair, far beyond what I budgeted for. and the building was far more infested with every possible insect that you could imagine, beyond just the usual cockroaches and bed bugs. However, as we all know, the hairier the asset, usually the larger the opportunity. Um, and fortunately, I was able to navigate through all the weeds over the course of about 18 to 24 months, and it really did set up for a meaningful equity takeout, which certainly positioned me well for the next one.
Yeah, yeah, and after Tyler's Oshawa building, probably a couple of years after that, I personally I've bought buildings with Tyler. I still own a building with Tyler,
Yeah.
and I've been on these journeys as well. And why I wanted you to talk about that is that when I look at multi-res and how you build that wealth, that equity, that base, it's really active investing. You're not buying an asset and just sitting back on that. You need to transform that asset to really get that value out of that asset. And as you said, there's tremendous wealth to be derived from doing that. And I like Tyler has transformed neighborhoods, complete neighborhoods that were, for lack of a better term, dog shit before.
Yeah, no,
And
truly, in
and
every
and
sense of the word, like
yeah,
abandoned, mismanaged, undercapitalized crack houses, and we've done them by the dozens. That said, we've got a pretty good recipe. We don't like to deviate from it. Again, it's another recommendation that I would make to a lot of people. Find a lane that you believe in and have laser focused, and don't deviate from it. Alex, there's a number of avenues within real estate as an asset class that you can create wealth. And as with any kind of serial entrepreneur, at times you have a tendency to chase a new sexy object
oh
or shiny
yeah,
object. And that's another lesson that I learned, probably later than I would have liked, but I got there eventually. And, that's the lane that we're kind of competing in now, which is typically kind of 20 to 40 units, mismanaged, undercapitalized assets that have a lot of upside available, but it takes some work to ultimately realize it.
yeah, and knowing your journey. So I remember in your early 30s, you had left the corporate world, um, and you at that point knew that, hey, your skill set was in multifamily and turning over assets. This is before Malleum. This is Tyler Pearson Inc. at this time, and that's when we bought these properties. And my year in that made me realize, going, I don't want to do this. This is crazy, because multi-res, when you're doing it on the own or with partners, and I would say Tyler was or not say, he was the expertise in the journey, and capital partner as well when we're doing these Hamilton properties. You buy the asset, you're all excited. You need to line up private financing when you do these. You need to line up contractors. So how many times you run into issues with contractors? We were sued. The city comes in. They don't like what you're doing. They shut down your site. There's cash calls. Like, it is so unpredictable doing these buildings. And again, everyone, there's a positive story at the end of all this.
Yeah, there is.
And hey, I'm telling all these stories where that one year I was involved and this was stressful. But when
It's only gotten worse for what it's worth.
yeah, I believe it. And this is
All
why
the
I like it.
problems have now 10x'd.
Oh yeah, and that's why I like other people building my buildings. So that's their
Yeah,
issue. But it's also incredibly profitable. So that first building that
it is.
Tyler and I and another business partner invested in, we bought that one for under $1 million. It was in the nines,
Yep.
and we probably put
Yep.
in about 500,000 into it. And our valuation on the property today, because we talk about it right now, is around that $4 million mark.
Yep.
Give or take 100,000 either way, depending on how you value the asset. And
Yep.
and and then Tyler forwarded along me an email, I think it was last week, and just the LRT being officially green thumbed or green lit in Hamilton, and that's
Yep.
going to increase the value of our assets.
Exponentially in my eyes, to be honest.
So when people are looking at multi-res, if they're getting into it, you got to go in with your eyes open, and there's tremendous wealth if you're doing that. But you're going to be active in it. You're going to have to contractors. You're going to have issues with cities. You got to make sure
Yep.
you're capitalized, And what I mean
Yeah.
by that, and what Tyler means by that, is banks aren't going to do it. Or if banks are going to do it, you got to have a lot of wealth backed up behind it. So you got to make sure that you have business partners or you have access to equity, because the numbers that you write on a piece of paper will not be the numbers at the end of the day when you finish the project,
Always.
because there are so many different things. So you're buying century-old buildings that have been neglected for decades. So you don't know what's
Hmm.
behind those walls. You don't know what every tenant is doing, what tenant issues you're going to have, if they want to trash a unit, if you think that certain tenants are going to leave and then they don't.
And
That's gonna impact
Alex,
valuations.
uh, on that point too, like, this is something that we've realized on a number of projects now. You also don't, you don't realize the opportunities that have been unmodeled. For example, you don't realize that when you buy a building, a 20-unit building, you don't realize, because you don't, in our province, you don't bank on any turnover. The reality is tenants are very protected in this province. However, things do happen naturally. Tenants don't pay, or family situations evolve where vacancies do occur. And all of a sudden you've got this wonderful opportunity to create meaningful lift in value. But if you don't have the capital available to do it, and this is where a lot of small to medium operators, I think, leave a lot of meat on the bone. They're not in a position to strike at that opportunity and hypothetically invest 30, 40, $50,000 into a unit to get $600, $700 of lift in rent for that individual unit, and they just fill it, and they fill it in a at a rate that is meaningfully below market. They view it as a win because they no longer have a vacancy. But the reality is, in many cases, they've left two, three, four, $500,000 of value on the table for that one unit,
Oh,
right? That's where,
yeah.
yeah,
I want, let's go a little bit in depth in that, because since we've since I've known you through the real estate world and emails we exchange, you talk about that. So talk about how increasing rent on one unit by $500, what that means in
mhm,
evaluation of the property in the bank size. This is what's so important in the
yeah.
bank
And
size.
I'm just going to do some quick math here for the Oshawa project. So for the Oshawa project, the average, I was just looking over small notes, the average rent roll there, um, at the time, again, we're going back 12 or 14 years at least probably, but the average rent there was, I want to say, 650 to 750, but say 650. A lot of tenants that had been there for a long time. Obviously, the building was in really, really rough shape. However, long story short, by investing, I think at the time, again, rough numbers, I think I invested at that point $10,000 or $15,000 into each unit that was available to renovate. But by doing so, it was able to get those units that were 650 at the time. It got them up to about 850 or 900, but say 850. That's a $200 lift, right, per month per unit. Just getting that $200 a month in lift per unit. Obviously, it's $2,400 per year in additional income, which realistically drops straight to the bottom line. That divided by a cap rate, which is how all these wonderful assets are valued. You use a 4% cap rate divided by 2,400. That's $60,000, right, in value that has been created. Now you 10x that by the 10 units that are available. $600,000 of value that have been created for six times 15,000. So it's a very wonderful return on investment that's available, but you need to have the opportunity to do it, and that comes usually through very, very active management, and you need to have the financial resources to go after that when those opportunities arise.
And what I'll tell people is that when you're in multifamily, after you get above 6 units, 6 or 7 depends on the bank, you get into commercial mortgages, not residential
Mhm.
mortgages. So when you get into commercial mortgages, the banks don't care about you anymore, or they care little about you. They don't care about your income. What they care about is they care about the income of the property, because they realize the property is a business as well. So as Tyler said, by increasing the rents by $200 across 10 units, divided by the cap rate of 4%, you create $600,000 worth of value. You can then borrow against that. And then
Right.
so you've made that investment, and then take that excess equity out of the property, and then you start building your portfolio, which you did. That is, you bought the Oshawa property, you went into 5 or 6 more properties, and then I know your key moment, or you're the talent on the ground, and then you brought your systems guy in, which is your current business partner,
Yeah,
a
I
former private
got a
equity
wonderful
guy.
business partner. Yeah, yeah, I've got a wonderful business partner. We joined forces about 5 years ago or so, and it started the way a lot of new ventures started. It started around, hey, what have you been up to? What are you thinking? He knew what I was doing in Hamilton. He's a I have no problem saying he's one of the brightest financial minds I've ever had the pleasure to work with. Um, and he started asking about what I expected him to ask about the returns and the risk profile and the deal flow. Is there other deals like this out there? Um, and without going into all the details, in short, he saw a real opportunity to leave his private equity company that he was working with at the time, which was Canada's largest private equity fund, a company called Onyx, which most people know. And he saw a lot of things I think he liked with my business, and no offense taken, he saw a lot of things he didn't like. And one of the things he did not like was the structure. He didn't like the tax inefficiency. He didn't like the liability that extended to my money partners. Um, so, long story short, we used his expertise again, without going into all the details, in my experience, merge those two together to form Malleum, which at the end of the day, we are, in my eyes, kind of a boutique investment firm that focuses on value add real estate, and we raise close ended private equity pools of capital to go and invest that capital into real estate and ultimately generate a return for ourselves and our investors.
Yeah. So
Um,
so
and it's
so
been a good road.
in layman's terms, basically Tyler's front stage. He's on the ground. He's out there, looking at the assets. So if you're watching like the Grant Cardones and all this American stuff, and people like sign up for my various programs, that kind of thing, Tyler lives that in real life. He's the one looking at
Every
the
day.
properties. And like literally, we talked about the Oshawa property where you didn't really look at the properties, but you learned your lesson. Like he's going in every
Yep.
single unit. He's like, hey, I see what the value play is here. So that's the front stage. He identifies the assets.
Yep.
Um,
Yeah, go ahead. Yep.
and then your business partner, he's built the financial models in the back end, which has allowed
Absolutely.
that to scale up and
Yes.
monetize that. And what the amazing thing about Malleum Partners is, and the boutique side of it, is we've now taken the active management out of investors that are looking to get into multi-res. So if you wanted to really take a passive role, and this is one of the most passive roles out there, unless you buy into a REIT on the Toronto Stock Exchange.
Yep.
But if you wanted to take a passive role in capitalizing in that 20 to 40 unit multi-res space, but you don't want to do anything, you can look at investing in the funds that Tyler creates through his Malleum Real Estate Partners. And I know how successful these funds are because once you launch them, how quickly do they fill up with your capital?
I think the automatic answer is usually within a matter of days, and usually it's from our existing investor base. I think I'm proud to say I think we've got a upper 90s percentile of repeat investors. We don't market because we're not allowed to market. We don't want to fall into OSC scrutinization. We are a true private equity company that we only target accredited investors. For the most part, it's honestly family and friends. It may be 6 degrees of separation here and there, but we all know money follows money. We're fortunate enough to have some wonderful money partners that have supported us along the way, and candidly, it's amazing. And I always joke with my business partner, one of the best times is when we do a distribution, because you get all the thank yous and whatnot. And it's at the same time we want to say thank you for our investors showing trust and support in us, because some people are writing some pretty big check sizes, and like I said earlier, it's not something that we take lightly. It's a big responsibility, but it's also an investment thesis that we strongly believe in. Because Alex, I've told you this before, and I mean this candidly. If anybody out there can show me an investment model that has as much alignment with their investor community as ours does, please let me know. Because candidly, I will also make an investment into that option or opportunity. At the end of the day, my business partner and I are meaningful investors in every fund. At the end of the day, we unfortunately have to personally guarantee all these mortgages still, which beats my head against the wall. But welcome to Canada. And
I
end
love
of the
that.
day, we don't make a return until we hit our hurdle rate. So I think there's a tremendous amount of alignment, and that's ultimately what we've tried to build our structure around, is having alignment with our investors.
And two other points I wanted to add. And one, I'm going to do a podcast video on this in the future. But it's something that I want you to chime in on as well. Is what I realize is I started my journey buying condos, so I wasn't chasing cash flow. I was chasing appreciation. So through my
Yep,
condos, I chased appreciation. Now I have appreciation, but when you're in residential, you do end up getting capped in regards to how many mortgages you can get. In the
for sure.
commercial side, there's
Yep,
no cap. And what I realized is that I could build a whole investment model on turning my condos into buildings. And you
yep,
could leverage your existing real estate assets, doesn't have to be condos, but your existing residential real estate assets. When you're tapped out on mortgages, just take the equity out of those properties and then flip those into buildings. Isn't you did that? Like when you had your Sarnia properties and everything like that, that's how you made your next jump into multi-res, right?
yep, yep. In short, without going into all the specifics, yeah, short answer is yes.
Yeah. We want to keep
Set
this
up the
nice and
proper
simple
structure in
for.
the whole codes and
Yep.
rolled everything over.
Yep. Really simple for anyone to do it here. Hey, Tyler's from Sarnia. I'm from north of Sudbury, Cape Real. There's nothing special about us, unfortunately.
No.
We're just small town kids with a decent head on our shoulders, um, and balls, and that's all you need to be successful and and hard work, right? Like if you just want to sit back and do nothing, a return can be made, but if you really want to build wealth, you got to look at for those opportunities. And the second thing I wanted to add, is a market that you and I both like. What do you when we haven't had this chat, we've sent emails and
Yeah, we haven't.
we haven't actually had
I
a
know where you're
chat.
going though.
Yeah. What are your thoughts on Alberta and specifically Calgary?
Short answer is I put my money where my mouth is, so I must like it, right? You know, I've been following Alberta for the better part of 12 or 18 months. Um, it's certainly a market that has been, and I'll say Calgary, I guess specifically, it's a market that's been, in my eyes, depressed far longer than it should be. Obviously, oil and gas has been hit in a meaningful way. The good news is it's starting to rebound for sure. But I draw a lot of similarities, if I'm honest, or if I'm being honest, to Hamilton. The reality is Calgary and again Alberta as a whole, it's always been viewed as that one trick pony, and Hamilton clearly has always been viewed in the exact same light as well for the better part of 2 or 3 decades. And I think for the first time in a decade probably or longer, a lot of seeds out west are beginning to germinate. It's no surprise if you pick up the paper at least, or if you read the boring economic reports like I do, it's no surprise that the numbers out there are really beginning to change. Populations are beginning to come back up. They've done a wonderful job, albeit still early innings. They've done a wonderful job of recruiting new industry outside of obviously big oil and gas. Obviously, the tech scene out there is exploding. To be candid, beyond my wildest projections. I think anecdotally, it's very similar. I think to what is occurring down on the U.S. West Coast, where you're getting a mass exodus from people leaving California and going to Austin or Florida or whatnot, just far more business-friendly environments. And I think you're seeing that in Vancouver, trickle over across the mountains and into Alberta. It's a far more business-friendly environment, in my eyes. Again, it's my opinion, and I think the prospects are very, very attractive. Again, I don't have a crystal ball. I don't know if my projection will come true, but at the end of the day, and you know this, Alex, I've always invested on economic fundamentals, and I think the good investors do. And they're at a point now where I'm willing to make a bet.
Yep.
And as you know, I've made a handful of bets in the last 6 months, and I'm probably going to make a handful of more, assuming that things continue to trend in the way they are.
Yep. And we feel the same way. Again, none of us ever have a crystal ball. Um, we didn't talk about this yet, but all of what Tyler has been in his company, Malleum Real Estate Partners, for the last 5 years. All your investments have been in Hamilton. Um, to my knowledge, unless you've expanded about a Hamilton, but how many units have you bought
The vast
in
majority.
Hamilton? Yeah, yeah.
Um, Honestly, it's one of those moments where I always feel like I should know this, but I don't anymore. I think from a pure asset perspective, I think we're in another month or so we'll be 32 buildings or so. All but two are in the downtown core of Hamilton. We've got one large building out in downtown St. Catharines, and we actually finally just secured our first multifamily building in our old stomping ground. You don't even know this in Waterloo,
Nice.
on Hazel Street of all streets.
I know Hazel. Yeah.
So anybody who went to Laurier, you will remember Hazel Street. That was an interesting drive going down that road 20 years later, a few weeks ago. So I think across the board, we're, I don't know, 300 units or so on the res side, hundreds of thousands of feet on the commercial side, office to retail. But the bulk of our weighting for sure is still on the multifamily side, and it's still the asset class that I'm definitely most bullish on.
And why I bring up Hamilton, and it's because you had a nose for Hamilton. You had invested it prior personally, and
Yep.
then scaled it up. And for you to compare Hamilton to Calgary, it's funny because they're not even comparable in regards to what the cities have to offer. Um,
Sure.
and the tremendous growth that Hamilton's seen over the last 5 years. And even before that 5 year point, there was a lot of growth from when you and I were buying properties before Malleum. The investors were like, I can't believe we're selling them for these. Like, this is incredible gains. And then that point,
Yep.
and you're like, hold on to your horses. There's
Hang on.
huge growth still
Yeah.
for Hamilton. So at that time when we were buying them, people thought we were paying massive premiums, but there was still so
Yep.
much more room to grow. So that's where the key is, where people got to really look where the opportunities are. And and I strongly believe that Alberta, and I'm specifically bullish on Calgary because it's the capital city, capital of economic city in Alberta,
Yep.
and the fourth largest economy in Canada, fourth largest population in Canada. It is hands down the best investment in Canada. Nowhere else.
And it's
Period.
again, like, comparatively and from a pricing perspective, and I hate just to look at price, but like from a pure pricing perspective, it does look like it's meaningfully on sale, right? It really does at the end of the day. And you touched on it earlier. It does. We're being honest with ourselves, which I hope hopefully we are. It does provide a wonderful lifestyle to a lot of people who no longer need to go to an office anymore.
Mhm.
So again, it'll be interesting to see how it evolves over the next 3 to 5 years for sure. Um, I think it's, in a way, it's still similar to Hamilton, although Hamilton's seen a wonderful kind of growth trajectory over the last kind of 5 to 7 years. I still think it's early innings. Like, so many people get caught up on just price. Well, it's gone up 40% in the last
Oh
two
yeah,
years, or Toronto's gone up 40,
yeah.
and it's irrelevant. It's, what does the future look like based on where you are
Oh,
today?
yeah.
Forget everything else in the rearview mirror.
The fundamentals on Hamilton and 5 years ago or 6 years ago or whatever, when we're talking about it, Hamilton actually has a real downtown core. It's on a suburb, so there
Yep.
is so much more room for Hamilton to grow, to become its own ecosystem, separate from Toronto, which it had 50, 60 years ago. That's why it has its own downtown core. Hamilton was its own city.
Yep.
You look at celebrities that were like Martin Short was from there, Eugene Levy were there. Like, they were wealthy families that grew up in Hamilton because of the industries that were there. It's just in an evolution of change right now.
Yeah.
And I know you got to go, so my one final point, and I'll just touch on Calgary again. But why Calgary is attractive is we're rewarded with cash flow while we wait for appreciation.
Yeah, it's, again, like, where else do you where else do you get that? From my perspective, I've always, in my eyes, been a very, I'll say, simple-minded investor. It's not that I'm just solely focused and I'm, just have my blinders on and I don't think there's any other, avenue to create wealth. I assure you, and you know this, like, I've looked at a lot of different avenues. I just keep coming back to this specific asset class for all the reasons we discussed. And
Yep.
until something changes, I'm not deviating.
Yep. Pavlov's hierarchy of needs: food, shelter, warmth. We invest in shelter. We know population growth is happening in these areas, so as long as population is growing, we're investing in roofs over heads.
Yep.
And the great thing is this is as close to a dividend to talk about financial streams. Rent's like a dividend. Every month we get a cash disbursement, and that's from someone living in our property. So populations are going up. That means there's going to be people living in our units, and we're going to get money for that. And the great thing is we control the asset, right? There's not someone else making decisions.
And there's not, this is a conversation for an entire day, and let's not get into it. But I will say, on the heels of everything you just said, the reality is there's a giant elastic band that has been over the supply pipeline. And again, if we're being honest, by all accounts, it looks like it's going to remain over the pipeline. And if anybody has ever taken economics and you look at the population numbers that are set to come in, and obviously the housing starts, and the lack of affordable housing and the lack of purpose-built rentals, it's an interesting scenario. It's attractive for sure if you are an investor and you have capital to participate.
Yep, and nothing's changing anytime soon. And if anything does change, it's going to take decades for that change to actually have any impact on anything.
I fully agree.
Awesome.
Okay,
thanks,
that was
thanks, my man.
enjoyable for
sure.
Yeah.
And thank you again. So Tyler Pearson, president, co-founder of Mallium Real Estate Partners. Thank you so much again for being online. We'll chat soon. I'll see you, my man.
No worries, buddy. Keep up the great work.
Great.
Take care.
And thank you, everyone, for coming and watching today. Remember, subscribe, alexjwilson.com on YouTube, and to check out our podcast or subscribe to our podcast, Real Wealth, Real Estate with Alex Wilson. Talk to you all soon. See you next week. Bye-bye.